7 best skills to learn for trading financial markets. First of all, it's important to research and gain a deep understanding of the market you're looking to trade. Many people don't even go to the level of depth where they understand the major reports and influences on that market. For example, the index market, which we trade here at Global Finance Trading, has official websites with information on how trades are entered into the market at the morning session and the afternoon, including things like options, dates, when they expire, and big news announcements, as well as the constituents or underlying information that relates to those markets. Gaining a deep understanding for the market you're trading and understanding the correlations that it faces when compared to other markets and researching those will give you a deeper understanding of your market that you're looking to trade, and therefore you may gain an extra edge over your competitors and other traders in the market. Doing research is a critical part of trading, and it will help you define your trading plan and strategy and help you adapt to future conditions as the market changes. Learning how to research, such as looking at websites, looking at YouTube videos that relate to your market, reading books that are relevant, those kinds of things can help you to research the market on a deeper level and find information that may help you gain an edge in the market. Applied analysis. Practice trading in one market. Understanding one market on a very deep level can really help you to get a better feel for how that particular market operates, rather than trading multiple markets and perhaps not experiencing the niche outcomes that each market has to offer. By applying your analysis to one market and practicing trading in the one market, even if it's on a demo account, you will gain a deeper level of intimacy with that market to understand how it moves, when it moves, and why it moves on a deeper level. Spreading yourself too thin may create a sense of loss in terms of your understanding of the markets, and you may not gain that level of depth to become successful. One thing with many financial markets is that you only need to master one of those markets to be successful. You don't have to trade a multitude of markets to be successful, because there are enough opportunities in most markets to be able to make a living or do the things you generally want to do. So spreading yourself too thin may just cost you time and lower your understanding of the markets. Predicting. So writing down your analysis and trade plan before each session. Predicting the market isn't necessarily about forecasting the future like a clairvoyant might. It's about making technical and fundamental analyses on that particular market for the time frame that you're looking to trade. Identifying key conditions of the market and forming a view that will help you to predict the likely movement in the future, the likely direction, and the likely range, as well as the potential drawdown that you might face through that trading period. So the next skill is effectively writing down your analysis and trade plan. The other good thing about predicting the market before it's happened is you remove the concept of hindsight. You predict the market, you write it down, you have exact levels, and even if you don't trade it, you can look back in the future and tick or cross whether that market actually played out how you expected. This will help you identify your analysis and when they're correct and when they're not correct, and gain an insight into your abilities as a trader in a sense of analyzing the market. Mentality. So removing ego and physiological responses to trading the markets. When you're trading with larger sums of money, ego and physiological responses can come into play if you're not prepared. Things like sweating, heart rate increasing, panic, frustration, and when you're winning, feeling egotistical about how good you are. Being humble in the markets is a very important practice, because the market is, at the end of the day, always right. And if you have a losing trade, the market is still right. So working on your mentality will help you become a better trader. Things like meditation, practicing gratitude, breathing techniques, and that kind of thing can help improve your mentality and help you to manage the physiological response to when you're winning and losing in the markets, particularly when it's higher values of money. And to be able to sit patiently and calmly and be patient to wait for those trades to play out how you have originally analyzed. And if you have the data to back that up, knowing that the trade has a higher probability of being successful should be enough to allow you to keep cool and stay in the trade and let it play out how it's meant to. If you don't have the right mentality and you become egotistical about the trading, and in losing conditions you have a physiological response that causes panic, incorrect decisions, and poor trading, it really just means that you need to continue to work on your mentality. Trading, real experience. There's no substitute for actually trading the markets. There's little nuances like the bid and ask moving around differently, the entry times, specific software adaptations that can cause an issue, particularly if you're trading across multiple platforms. So there's no substitute for real experience, getting in there, getting a feel for how the market operates in a real environment. So not necessarily demo trading, but trading with real money, because then you're also going to learn about yourself and how you react to winning a trade, losing a trade, and being in drawdown or profit before that trade has closed. So with trading, it's not just about what you're dealing with in the markets, it's also about yourself and how you react to those conditions. Many people can have a profitable strategy and system, profitable trade plan, and they sometimes just do the opposite of what they're expecting or what they're wanting to happen. Or they'll close out early, whether they're in profit or loss. They'll panic and see the market go up if they were buying, but they've already closed out and now they're wanting to get in after the move's already happened, but it's too late. And then there's revenge trading. So getting in there, getting the real experience and understanding yourself as a trader can really help to build your skill set and understanding of what you need to work on to improve. Data. Track your data, analysis, and statistics. Tracking your trading history is a really important process. For example, you can use MyFXBook as a free tool. It will give you a range of statistics and data based on your trading history. You can filter by market, you can filter by hour of day, day of week, and more. Understanding how your trading plays out in the real market, and once you have enough data to reflect on, you can then analyze your own trading, build statistics around what's working for you and what isn't, and filter out how you trade and operate in the markets. So while you might have a profitable system, there's a chance that some markets will be losing more than others, and that might be on a longer time frame or a longer term. Obviously, you might have winners and losers across multiple markets, but if there's a couple of markets that are really losing just about all the time, wouldn't it make sense to then remove them from your trading plan? Perhaps you might continue trading them on a test account to see if it changes, but the real data will tell you whether you're making or losing money. So it's like if you had a shop and you continued to buy a product that wasn't selling, there's a good chance you would eventually stop buying that product. It's the same with your trading. So you can filter out markets, you can filter out certain days, you can filter out by the hour, you can do a lot of things with the data, but you must track it first to be able to understand where you're doing well and where you're not. So learning about how to analyze your data and how to use statistics to improve your trading strategy over the long term will be really helpful. Coding. Remove yourself from the equation. Coding is an important skill for traders in a sense that many platforms utilize a certain framework of code to allow you to automate, test, or run certain functions. Being able to code may help you to more quickly create tools that are useful, test strategies and back test more quickly. And as an example, removing yourself from the equation could mean that, let's say you build a trade copier and you trade every day, but you know that your statistics show that, for example, on a Wednesday, you generally lose money, whereas the rest of the days, Monday through to Friday, except for Wednesday, you make a profit. You might continue trading on one account as a master account right through the week. And to remove yourself from the equation, in a sense, in terms of the risk management and the process of working with that trade, you might build a trade copier specifically around how you want to trade. And then whatever you do on that master account, the entry copies across to another account. Then that other account is run by an EA or an expert advisor that eliminates your emotional potential to destroy the account potentially or reduce your earnings. It allows that account to simply run exactly as expected, using the stop loss and take profits, the risk management and all of that. And rather than watching that account go up and down each day, you can actually run it to another computer based on your own custom code and your own custom trading plan. To be able to do that without coding would be very difficult, because you'd have to find either somebody that will do it for you, which will cost a lot of money, or an expert advisor that's already built that you'll probably have to buy still anyway. So coding can actually reduce your exposure and your emotional impact and your mistakes and room for error, even though you're potentially doing manual trading, you're researching the markets, you're doing your analysis, but removing your ability to alter the risk, change the stops and targets and all of those things that can lead to issues when it comes to risk management, if that's all separate from you and you've coded a hard system that basically runs a trading account how you want it to, based on your entries, and limits the number of trades that can come in, that can be a huge benefit to you. So that's just one thing when it comes to coding. You can also run back tests, you can run data on a lot of things and test a whole heap of stuff that you probably couldn't as a manual trader only. That's 7 best skills to master as a trader to improve your performance in financial markets. Remember to like and subscribe if you found this video useful. Good luck with your trading.